Hey everybody, hey traders, Chris Pulver here. Happy Monday. It's the 25th of September. I'm about to get on the road for about 20 hours, road tripping back to the Midwest. Want to do a video to cover a little bit of everything. So I'll start off with Portfolio Builder, do a spot check on our currencies, see how things are unfolding with our Portfolio Builder positions. We'll get into stocks options, some trades we have for equities on demand, for Delta Trader, and then some currency strength and flex this week. So a little bit of everything, like I said. Let's get started. Risk disclaimer, we know there's risk in trading. Please don't always use trade capital only. Do not trade with money you cannot afford to lose. Whether you're trading stocks, options, futures, forex, cryptos, you know the deal. If you're following me on social media, best place to follow me is youtube.com/Chris Pulver. I just started a new playlist last week. You can check it out on my channel. It is Trader's Path to 100%. I'm just going to start doing weekly updates. It's kind of like a video blog where, here's my stock and options account at this balance, what I do this week, positions I'm taking, things I'm investing in, currencies as well. So it's a stocks, options, currency look. Several different accounts that I'll be looking to kind of double over the next 6 to 12 months. That is the plan, trying to go after 100% gains. So check that out. And then our live sessions. I've been on the road and traveling quite a bit the last couple of weeks, so my live sessions have been sporadic. So I apologize for that, but I'm trying to keep the content dripping in on the regular with videos like this. And so we still have some touch points. I have my Telegram channels, all the access and messaging I do for my weekly trading rooms. Okay, so let's get into the markets and have a look at everything. I'm going to first start out with my portfolio builder. Took a look this morning at the currency strength. This is one of my favorite things to see. If I see that the Swiss is weaker, great. That's good for our positioning in portfolio builder. So here is my position, and this is where I'm at as far as trades. So it looks like my New Zealand Swiss has had an add-on. My CAD Swiss is still at I think this is the fourth entry that's been filled. The New Zealand Swiss, I believe, is now at 4 entries. The Aussie Swiss, I believe, is now at 3 entries. The Dollar Swiss is at 4 entries. I believe 4 entries because we stacked up orders to the upside, and then Euro Swiss still remains at 1. As far as the pips total, last week we're up over 300 pips. I think 320 was like the high of the check. I think I checked on Wednesday, Thursday, Friday. I think like I said, high point was around 320 pips in profit. Right now, with my break even and my margin, I'll check my total margin because I know there's been an increase with added trades. My profit right now, my pips, that's what I'm looking at right now with pips. 79 plus 102 plus 71 plus 160 plus 71. We're up 483 net pips. So I'm going to go ahead and issue this in my portfolio builder update here. So this is portfolio builder spot check plus 483. 483. New fills on New Zealand Swiss and I think Aussie Swiss with buy stops filled. So these are breakout trades. I'll be looking for additional levels and wave 3 and wave 5 moves to position for in the coming weeks and months. Okay, but so far so good. Dollar wise, I mean, I'm going after it's a $10,000 count. I'm up $300. It's not 10 grand. I mean, I'm trying to double this account, but I am looking to add positions. So, here's a dollar Swiss example. If this thing starts to give us a pullback, I'm looking to scale in on some pullbacks. I already have 3 buy limits right here. I might have to adjust those and try to scale in. If this is going to be a bullish pattern, if we have a high that pulls back, I probably will move this up, and this up to try to catch some Fibonacci levels and pullback zones, and then look to see if this is wave 1, pullback wave 2, push for wave 3. If wave 3 gets me up into 94 or wave 3 gets me up into 96 to 98, I'm going to try to get as much add-on trades as I can have to make that dollar Swiss and other positions doing the same thing going really well for profit. So New Zealand Swiss, same thing. If this is wave 1 starting out, then I'm looking for a 2 pullback and a wave 3 push. Wave 3 to wave 5, maybe getting up here towards 6,000s. Aussie Swiss, again, kind of a wave 1 move. We have one more breakout entry. I can look at stacking some orders, maybe a buy limit at the bottom here at 56.50. If we come all the way back to this high, if this is all wave 1 to the high, pull back wave 2, push wave 3, all these things taking shape. So portfolio builder is looking great. The time to that class couldn't have been any better, and obviously any traders following along are certainly happy to see that the P&L is climbing, and it's never a bad thing to be playing with house money and looking to add to those winners. All right. Currency strength chart really quickly. Swiss is weak, which I like. We've got the CAD, the New Zealand, and the dollar on top. We had a pretty nasty week last week with high volatility in the stock market. It was mostly risk off. If I go to Friday's trading, this would have been Friday last week, which is kind of an interesting setup. We had JPY really soft. We had New Zealand and Aussie on top. Speaking of Aussie, New Zealand, let me check something really quickly. Let me go back to this trading session. Aussie New Zealand is pushing lower. We have a sell trade in Aussie New Zealand at 108.23. We're now up 60 pips. We've been waiting for this to break for a while, just a nice little trend line break. I'm looking for, break, pause, break, bear flag, either coming back into 107.25 or pushing all the way down into this pocket area in the lows around 106, taking some profit there. Hopefully we can end up grabbing about 200 pips on that Aussie New Zealand to the sell side. That's a trade we have running in Flex. Dollar index, let's take a look at dollar index really quickly, and I'll get into the indices. So dollar index, here we are, DXY is at 105 and change. The bulls are still in control with risk-off trading. The dollar still showing some strength. Look, I'm not turning into a dollar bear until we get some confirmation on the right-hand side of the trend line. It makes no sense to call the top on the dollar when there is clearly room for the DXY to come back into 108. There's room to come back to 109. Obviously, we can pause sooner. Let me bring up my drawing tool here. We could pause now. I mean, we have an equal high here, equal high here. We could pause now and have the dollar go down. We've had several weeks. I mean, in fact, I think we're pushing 10 to 11 weeks in a row on the dollar. This is pretty uncharacteristic of really any currency. And you don't even see this in stocks very often without having at least a pause or hesitation. So, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 straight weeks of dollar strength. Great. So what does that mean? Maybe it means more of the same. Typically, we have like this kind of 7 to 10 rule, 7 to 11 rule, where after 7 candles or 11 candles, we're starting to push into overbought territory. If I get onto the dollar on the daily time frame, do the same thing. I'm checking to see, am I overbought yet? Not quite, but we're close. We are starting to see some disagreement between price and momentum. You can see that right here. So I have price going higher and momentum going lower. So this doesn't mean call the top. This means get ready for potentially a retracement or correction. But again, with risk-off flows, dollar strength, positive swap, carry, all that good stuff. If the dollar gets stronger, the stock market is still vulnerable to the downside. So I think that transitions well into the SPY. We're looking for some potential correction. I measured out some symmetry here to around 427, high to low, lower high to lower low. There's two spots I'll be watching for over the next week or so. This 200 EMA on the daily time frame is right around 427. So right here. Okay. So if price, let's say that this week, we have a initial push to the upside. If this move gets faded lower, so let's say that we, started here, we rallied up today. If we rally up to fill this gap, that gap is around 438. If we have any momentum to the upside at 440, great. We had a low around 429, 428, 440 is about $10 to $11, which is kind of the average move for the ATR for the weekly. All right, which is what I'm looking for if I'm a bull. I put in a straddle this morning for Delta Trader. If the buy side gets up to like 440, that should make us some nice profit on the bullish side. On the bearish side, we do have 427, and we have this previous breakout point at 420. I do think that 430 is a pretty significant line in the sand. 420 is really the spot that the bulls would have to step in to defend. We've talked about the way this plays out. If this is high, low, lower, low, I can see that 200 exponential moving average offering a bit of a bottom. It may not be this big push back up to new highs, but it could be at least enough to have a correction and to have the bulls come back and at least retest the high, try to retest the high, and maybe the rest of the year looks like this, right? Maybe the market had a decent correction, which I think off the highs, there's always this kind of 5 to 7 to 10% level from these highs here down to the lows. I mean, the SPY's corrected about 6.5%, slightly higher than I misplaced that. So let me go back to here. There's the high post FOMC in July. We've had close to a 6.5%, 7% correction. To get us all the way down to that 200 EMA, it's probably a 7 to 8% correction, which again, in a healthy bull market, that's a nice correction to have, especially to look to buy on dips. Like I said, the question I'm asking, myself in the market is, if this offers a buying opportunity, is this a buy and hold, or is this a buy and protect? Right? We come back to the highs. I mean, look, if we can get let's say $15 to $20 of upside, there's a time and a place to be very aggressive directionally to make some nice money, right? I think to the downside, if you have been short, if you've been long puts, if you've been trading both sides, I mean the put side has been pretty lucrative the last couple of weeks, just like the call side was lucrative, pretty much all year. So I think that 200 EMA is a good indicator to watch on the daily time frame and the SPY, and the same thing goes to the Qs. We have a daily indicator right here. There's still some room to get down towards it. You notice here we haven't hit symmetry. High to low, lower high to lower low. We haven't made a lower low. My 200 EMA is right here around 340 to 345. The previous breakout, the Qs were much more aggressive to the upside with large cap tech. Your Mag 7, your Enormous 8, all those kind of leading the way for the first half of the year. Market breadth is pretty ugly. If we take a look at FinViz right now, you're going to see a majority of stocks below the 50 period and the 200 period. So right now we have about 80% of the stock market below its 50 period moving average and about 65% below the 200. That is not a good sign, right? Like this is market breadth bear market right now. See that? So 80% on the below the 50 and then 65% below the 200. That's a big bear market right now. Now, again, with a caveat, with an asterisk, it doesn't mean like I'm just selling everything. Look, we've been in this like slow, drifty correction for the last month or so, right? Since we had the post FOMC high in July, August, September have been mostly correctional. Okay. And some stocks have performed far worse than the broader market. Keep in mind that the SPY, the Qs, the broader market is also lifted by the pretty much risk off flows, where when you see money going back into Amazon, money back into Amazon, Apple, Nvidia, Microsoft, things like that, that's kind of a risk off flow where these are like the safe plays right now. And so the SPY still benefits from heavy investments in Amazon. I did take some positions recently. I'm bullish on Amazon, so I've been buying. I think I started positioning around 135 for like a little bit of credit spreads, a little bit of exposure. And I'm going to look to see if Amazon, if this is a range, Amazon pops right back to the highs, great. If this has more downside, this gap gets filled. Again, I'm looking at the 200 EMA. This is also a 38% fib zone from this low. So realistically, if Amazon is down to 125, I really like this area. 125 to 100, I'll probably just dollar cost average in over that space. Area 1, area 2, area 3, I can position with options, position with fractional shares, and looking for Amazon to make a run. Again, back to the highs. Longer term, I'm looking for Amazon to go to all-time highs. I mean, Amazon has not had the same type of AI run that everything else has had. I think Amazon is still one of the better performing stocks, in the world. And it's not just AI hype. I mean, Amazon makes a ton of cash. Amazon has very, very little competition. Amazon has the cash to buy up any competitor. Anyway, I think Amazon is a pretty solid play. So I like Amazon quite a bit. As far as I'm happy we're getting some pullbacks. I like the 120 zone. If we get a pullback into 125 or 120, anything deeper than that, we look here some left structure around this 100 zone. So like I said, 120 to 100, I like this area to start looking at dollar cost average into Amazon and then looking for retest of the high. Obviously have, aspirations to go to all-time highs, and give this enough time. Like, does Amazon over a 5 to 10 year period, do we get back to, a $500 stock or $1,000 stock before we have a split? Sure. So could I get more shares for it? Sure. Could I 10x my money? Sure. All the above, right? So I like the exposure in Amazon longer term, and I also like the exposure in Amazon shorter term, over the next maybe 6 months. So that's a stock I'm watching very carefully. Watching the SPY, watching the Qs this week, looking to get positioned on Amazon, lots of chart alarms. So we'll keep an eye on that. As far as expirations go this week for equities on demand, we don't have a ton. I need to put in this is a 929 straddle. So this is a SPY, 929 straddle. This is for the Qs. I will update that in just a moment. If we go to the 929 expiration for my equities on demand, I have an SLV expiration, 23 by 22. SLV right now, I believe, is trading below that. We're trading at 21. So I don't need to take any more shares of SLV. I can just take the small loss on the credit spread, collected 50 cents or 51 cents. I'm okay taking the 49-cent loss or 50-cent loss, and just keeping the shares with a break even around 17. I own SLV around $17. I'm good with that. What's the other one that I have for expiration this week? IWM. That was a bear call spread that we didn't get filled on. Or I'm sorry, we did get filled on. On a dollar spread, we collected 74 cents. If this one is still open in our platforms, I'm just going to take the 25, 26 cent loss. I believe IWM was back down to 180 or lower. So we're down to 177. And again, this trade initially, we took the bear call spreads down here. We tried, it was back in this area. So we tried to take in the money bear call spreads. I was trying to do in the money bull put spreads. The in the money bull put spreads paid nothing. I mean, I was going literally $5 in the money and I was getting like 40 cents for the dollar, which is ridiculously skewed. So it was definitely more skewed to the downside. We took a stab at it just in case it didn't work out, but we're losing 25 cents. So it's not a huge deal. That being said, if the IWM does drop, check this out. If we come down into this level around 170, I'm looking at bull put spreads. We come down to this area, I'm looking at bull put spreads. This is another one from an index perspective that we have to have a broad market rally for small caps, but there is lots of upside potential on IWM and the Russell 2000 versus a NASDAQ or a SPY. So as far as that catch-up trade is concerned, I mean, IWM to get back to range highs even. I mean, even if it doesn't go to all-time highs, even if we have a range play, this move is still a 20% upside. Going back to these previous all-time highs, that's a 40+% upside. That is way better as far as risk reward. To me, that's way better than hey, I can go 15% to the SPY or 10% on the Qs. However, I mean, I just want to say this high to low with all this consolidation, this if this coils even more, one thing we have to be watching is, this rally and this correction, it is subject to a breakout one way or the other. Now, I typically look at breakouts as what led. This led, right? So I would favor, historically speaking, the markets tend to go up, the assets tend to go higher. So I tend to look at this as the first direction, but willing to play obviously both sides. We get a breakout to the downside. This still is potentially a broadening pattern, and obviously that gets very ugly. If we're going into like worse than 2008, worse than 2020, more of a sustained downtrend in a bear market, sure, let's make money on it. But because we got here this way, then this correction, this consolidation, I think looks at when it's coiled and ready, we might have a lot of sideways motion. And that's what we have to be prepared for. Maybe the next 3 months, 6 months is not bullish. Maybe it's sideways. So we'll have to craft some strategies to maybe benefit from a sideways market. If we have a rally, great. Let's participate when it seems like it's a good time to do so. So, again, watching the SPY, watching the Qs, watching the IWM, looking for risk off trading, watching the dollar, all these things are going to play out and be a big factor in how I position over the next 3 to 6 months. Okay. So for this week's trading, not a ton of expirations for equities on demand. Portfolio builder, things are looking well. We had a couple of add-on trades on the Aussie Swiss, New Zealand Swiss, CAD Swiss, Dollar Swiss. So I'll update that with my break evens. Equities on demand and Delta Trader, we had our straddles in this week for the SPY and the Qs. For Flex Room, we still have our Aussie New Zealand running. And I will take a look at some other setups we have. We're looking at some swing trades. We're looking at some directional plays. Really what I'm watching the closest over the next couple of weeks and months, we got through all the central banks the last 2 weeks with the Fed, Bank of England, ECB, BOJ, Swiss National Bank. We've pretty much, had all the majors. And now I'm looking to see, what's our trend? I'm watching the yen basket. I'm watching the dollar basket. If we don't have big directions coming in the stock market, fudge, I should have posted that last week. If we don't have big directions coming in the stock market, I would expect the dollar to maintain strength. We might not see the JPY gain strength either. So looking at something like the Aussie yen, I mean, the Aussie yen is still fighting the upside. I mean, we're going up. The CAD yen is going higher. Oops. I mean, so the JPY is probably the least appealing currency right now. And the only way I see the JPY getting insanely strong in a very short amount of time is some type of end of the year rebalancing by, either the narrative or the commentary or the policy changes by the Bank of Japan. They didn't change rates last week. They stayed at negative 0.1%. The dollar yen is trading up to 148.77. We have those intervention highs at 150 and 152. It's pretty straightforward. Don't fight this currency pair until we start to see more of that. If there's confirmation, then we can start looking to position for it. But I'm certainly not interested in calling the top on the dollar yen. It's pretty straightforward. And that goes for the other yen crosses as well. So I'm still watching the dollar basket. I'm watching the yen basket. I want to see how these things unfold. It seems like right now, if we have a slowdown in volatility and there's not really a big scare in the market, then it's going to favor carry. It's going to favor swap. It's going to favor rollover. And the dollar and, maybe the New Zealand, the Aussie could be beneficiaries of that. We'll see. I mean, the VIX spiked up the last week from 13 to 17. This is probably something I could look at fading just in case. I probably should look to fade like the VIXM or something. It's not. It's just not a big spike. I mean, I was looking to fade the VIXM if we had a big scare towards like 21, 22. Look to fade that move. The VIX I think will probably settle back in. Oops, not the VIXM. I'm just there. The VIX. So spike back up to like 18 to 19, and then it just kind of settles. So maybe this is our new range. If we go from lows around 13, highs around 19. And so, yeah, I mean, maybe some indecision, but I don't know what's going to make that happen. There's threats of a government shutdown. There's threats of risk-off trading. I guess the Fed is obviously super firm on their stance and higher for longer. But I feel like that's going to be a slow burn to the downside as opposed to a big scare. I mean, when you get your big spikes in volatility, it's because the market's caught off guard. Right now, I mean, the market's just kind of sad and depressed with the reality of higher for longer. So what does that look like? Probably like this. It spikes up and then drops, and spikes up and then drops, and spikes up and then drops, and this is going to be spaced out over several months. So I just think that we had a spike up from last week's sell-off. It was a solid $12 to $13 candle on the weekly SPY, the weekly Qs. And from there, maybe this week as we put in a bit of a near-term bottom around 428, 429 in the SPY. And I mean, right now I've watched the market this morning go from a low around 428 and change all the way back up to 431. So the bulls are at least stepping in for the morning to kind of defend, looking for a short-term buying opportunity. How the week settles, we'll continue to watch. But hopefully there's some good volatility post FOMC, post other central banks, and we'll see if this is going to continue. But like I said, watch the 200 exponential moving average. I do have some positions here to kind of buy some of those dips and see how I can position for that. Same thing on the Qs. Watch that 200 EMA. Amazon, some material plays, some China. That's what I'm looking for as far as my concentrated stock portfolio. Okay, so that should do it for a little recap, talking about everything, portfolio builder to equities on demand to Delta Trader to Flex Trading Room. This week, I'll spend some time. I'll look at a, kind of an update for my Trader's Path to 100 video series and see how things are going. I'm playing a lot of defense right now in my stock and options portfolio. I am enjoying some positive swap with this portfolio builder in my currency portfolio and taking the trades as I come. I'm not super positioned on dollar crosses. I'm not super positioned on yen crosses. I'm just really enjoying this is my big basket I'm focused on to try to get this, this nice growth over the next, 6 to 12 months. So that's a little bit of everything sprinkled in. Happy Monday, happy trading, lots of profits, and look for my updates in the Telegram channels for the trading rooms, and I'll try to get another video out for everything later this week as well, as I'm able to sit down for a little bit. But I'll be on the road a lot, leaving from Utah, going to Indiana, spend some time in Chicago and Illinois, and then I'll be in Michigan. So it'll be a busy week. I'll be on the road a lot, and then come back out to Utah here Saturday, Sunday. So back in the saddle for business as usual next week. But I'm on the road. So if you have any questions, let me know. You can hit me up in the Discord channel, ask some questions, chime in. Otherwise, like I said, look for the updates in Telegram and the classes, and I will post another video later this week. Okay, I'll see you soon. Thanks. Bye.